Alright, ladies and gentlemen, noobs and professionals, I don't care who you are, everyone is going to be getting the stimulus check. Well, not everybody, but the majority of you guys that are going to be getting the stimulus check, I want to show you guys 3 different ways to invest that money, and possibly something that you can do that's just a whole lot smarter than just saving it or spending it. I can guarantee you that. So stick with me, and I hope you guys learned something like always. And yeah, let's get into it. Alright, so ladies and gentlemen, without further ado, we're gonna get straight into this. One of the 3 easiest ways to invest this how much money you guys get is gonna be in the form of an ETF. That's just one plain out simple way of getting this ball rolling. A lot of you guys, this might be the first time you guys actually put some money into the stock market, which in this case, I'm just gonna estimate $1,200 is probably what we're gonna be putting into the market. So a safe way for people to really dip their toes into the market and to start investing is in what we call an ETF. Which is basically, in this case, what you see on Robinhood, Power Shares QQQ. This is ticker symbol QQQ. This specific ETF follows the NASDAQ 100. I personally am invested in this one. I personally love this ETF because I just love the NASDAQ. I love the technology sector. I think it's got a lot of fast growth in there. And I'm a little bit of a risk taker, so the NASDAQ is what I like to go with. It's extremely safe. It is the easiest way to diversify your portfolio because just by putting your money into this one ETF, you are putting your money into 100 different companies. That's what this follows. It follows the NASDAQ 100. It's the 100 biggest tech companies out there. So you're going to be invested in Apple. I'm pretty sure Tesla's now in there. Google, I mean, you got the powerhouses in there. So this is a really good way to put some money in there. This is also a very good way to get paid dividends. Every quarter, they will pay out dividends to you. So don't take my word on it. Do your own research, but I am going to show you guys exactly what we always go through when we look at something like this. I'm going to break down how I find out what is a good ETF. So the first way we find out what makes a good ETF is we look at their prospectus, which is basically their 10K report. It's their annual financial statements. So if we actually go over QQQ, you'll see that it is operated by Invesco, a very, very strong company. As you see in the prospectus, we'll scroll up. This is the very first thing you'll see. But what you want to go down to, when you look at an ETF, what you want to focus on is growth. What are they diversifying into? And how much is their annual expense? ETFs, all ETFs are going to have an expense. You have to pay them a certain amount of money every year for them to handle all 100 or however many stocks they're invested into. So the one good reason why I love, like I said, there's so many of them, but one of the reasons why I love QQQ is because it is extremely cheap. They actually almost don't even really charge you. As you can see here, the annual trust ordinary operating expenses, okay, that says 0.20% of the trust's annual net asset. So that's not even 1 full percent. And not only that, but it's only 0.20%. So that is incredibly low. Okay. So that's one thing you want to look into in an ETF is how much are they going to be charging you annually? And how much are they going to be charging you? That also is going to play into how much are they going to be charging you if they have to make a change to that ETF. So let's say in the NASDAQ 100, let's say the 100th company in there, let's just say something like the coronavirus takes them out, right? Well, that right there is going to be replaced with another company. So that's a transaction. So when they do that, they are going to charge you a transaction fee, so that because they're modifying the ETF. So that also is going to be huge and critical. That 0.20 is going to be huge. I'm telling you, that's what really is going to make an ETF. If you know you have a great ETF like the NASDAQ 100, if you can get it cheap, it's beautiful. Okay. So that right there is probably going to be number one when it comes to what I would probably do with the stimulus check. And that's going to segue us into number two, because that's going to be another ETF, except something completely different. So let's get into that. Okay, number two, getting straight into this. This is another ETF. However, this follows another sector of the stock market, which is just going to make it even easier to diversify. I think this one's even safer than the NASDAQ one. Now, obviously, when you're investing in the stock market, I mean, just take a look at it right now. It's volatile. You're going to go up and you're going to go down. But what we're looking at is we're looking at the long term. We are long-term investors here. So we're looking 5 years, we're looking 10, we're looking 15 years out. And we know that when we invest in a good, strong company, over time, they're going to grow, okay? So this ETF right here is the Spider 500. This tracks the S&P 500. This is the ticker symbol SPY. This is probably one of the most popular ETFs out there. This is no joke when it comes to the ETF game. This one pays a really good dividend of 2.21%, and right now you can see that it's taken a really big hit, obviously because of the virus. However, if you guys thought that the QQQ ETF annual expense was cheap, I'm about to blow your mind. So let's get over to the prospectus real quick. Bada boom. So this is what it's going to look like as soon as you get into it, and if we scroll, what you're going to see here, and yeah, this is not a joke, the annual fee is 0.09%. So that beats the QQQ 0.20%. That's insane. I mean, they legit almost don't even charge you guys. That's why so many people love this ETF, because one, it's one of the safest. You instantly are diversified into the S&P 500, which is the 500 biggest stocks. And it doesn't really get much safer than that over the course of a long-term investor's portfolio. This right here is probably and should be a staple in people's portfolio and beginners' portfolios. I don't currently hold any because I've had mine in the NASDAQ. I like a little bit more risk because I get a little bit more growth. I get a little bit more out of it. However, there's a little bit more risk that goes into it. The NASDAQ can be a little bit more volatile over time. However, the S&P 500 is basically what everyone compares their portfolios to. Did you beat the market? That means, did you beat the S&P 500? So this right here is a no-brainer when it comes to what could you possibly do with your $1,200 stimulus check or however much you get. This ETF is a home run. So look on it, take a look at it, go through it. Down here, it's going to show you what its growth has been since 1993, which is insane. So, I mean, this stock has been around for a while. Spider's been around for a very long time, and you can see the growth on this is off the charts. And the other reason why it's so easy to invest in this is because you already basically know where your money is going. It's going into the S&P top 500 companies. So you don't have to go through every single company they're invested into, because they're just tracking the market basically. So you don't have to go above and beyond and do any extra research, just like QQQ. It's just as simple as saying, I want to follow the NASDAQ 100, or in this case, I want to follow the S&P 500 and collect some of those beautiful dividends. So with that, let's get into number 3, because I think this one's a little bit more exciting. So let's do it. All right, ladies and gentlemen, the last one, the last way to invest your stimulus check is probably one of my favorites. It's buying physical gold. And I'm a little bit excited because I just discovered this company, this website. They're called, I think, Mene. I probably butchered that, but whatever. This company is actually a private company, so you can invest in them if you actually really want to. But the beauty about this company is they make jewelry, and they make a variety of different kind. But what makes them special is they make their jewelry out of 24 karat gold, which is 100% gold, and they weigh their jewelry by gold grams, which is beautiful because that gives you the most accurate representation of how much gold you're getting with your purchase. If we go into their website, you can see their introduction here, but what I like to do is just show a couple different things. I'm not sponsored by this company. I have no stock in this company. I haven't even bought anything from this company just yet. I just like to look up different ways to invest in actual physical gold, and this is probably one of the most creative and best ways to do it. I have done a lot of research on them, and they are actually backed by Peter Schiff, which is actually one of the main ways I found them. But what they do is they make their stuff out of pure gold, so it's essentially it 100% is investing in the precious metal gold. So buying something like one of these bands that look like straight up Lord of the Rings, this is actually similar to buying a gold bullion. You're just not buying a full ounce of gold, you're buying however many grams. So in this case, you're buying 7.9 gold grams for $547. So what they do is they have a 20% markup, so you're paying actual gold price. So you're going to pay for the gold, the amount of gold, so in this case 7.9 grams, and then they're going to have a 20% markup, and then that's all you're paying for. So you're going to get a beautiful piece of jewelry that is actually going to increase as gold increases in value. So you're purchasing physical gold that you can sport around and look kind of nice in. So I'm actually going to buy something from this company eventually. So I'm very, very excited that this is a thing. And when they buy, if they ever buy back your jewelry, if you want to, they will pay you the actual going price of gold the exact moment you're selling it. So like I said, this is investing in physical gold. You buy this ring, and in future, you can sell it for the price of whatever the going rate of gold is at that time. It's pretty awesome. So I hope you guys enjoyed the 3 different ways, 2 ETFs and 1 physical gold way of investing your stimulus check. And like always, I hope you guys got the most out of this thing. Support me all you guys can. Thumbs up, likes, follows, all that good stuff. And if you guys have anything you guys want me to cover, drop it in the comments and I'll take a look at it. So thank you. Bye.